Welcome back to the channel. My name is Brad, and today we're going to talk about Bitcoin for retirement income. It's going to be a long video. Stay tuned. So there's chapters down below for in case you want to skip some of it, but I suggest you watch the complete video. My name is Brad, and I've been retired 7 months, and we're going to talk about Bitcoin and how you can use it for retirement, my plans on using it for retirement, and things that you might want to know about different funds. So if that's interesting, let's get right into it. Fear and greed right now for the stock market is 51. You've been watching the channel for a while. You should have been greedy when it was fearful. Now that it's 51, that's the medium. And when we look at the fear and greed for crypto, it's up at 75. So they're not as fearful as the stock market. And that's a very interesting conversation. They didn't drop down like the stock market did. Just something to think about. The next thing we're going to talk about is Bitcoin Evangelism. This book is a book that you probably should have already read by now, but you probably didn't. Long story short, people want to know why I believe in Bitcoin. I believe in Bitcoin because I've read this book. Yes, he does a very good job. There's an affiliate link down below if you want to go check it out, but you don't have to. You should read the book, understand what's in the book, so you can understand all fundamentals of Bitcoin. I don't have 25 hours to talk about all the fundamentals of Bitcoin. You should read the book. One thing that people know about me, don't know about me, is I used to be into mining. And people always ask about mining. Here are two miners that you may want to go check out. I have a link down below. I am not 100% not an affiliate. I do own the Canon miner. Just throw it out. I bought it directly from Canon from China. You can get it imported if you don't want to deal with imports and all that. You can buy it from an American source. Just throw it out. Link in below. I am not an affiliate. Just throw it out. But if you want to get into crypto mining, you might want to check out that website. Locally here in the United States, a lot of the miners you can hook up to 110 volts and you don't need 220 volts. And that's a whole different subject matter. Now, is it energy efficient? That's going to be the first question anybody asks. And the question is it depends. My experience, and this is how I kind of screwed up and learned as I went, is I was mining Ethereum and I would sell my Ethereum to pay for my electricity bill. Oh, Brad. If I would have just held on to my Ethereum, I could have retired a long time ago. But I didn't. And that was shame on Brad. I mine for fun now. I just collect my Satoshis and I put them in a cold storage and everything is good. And I don't really care if it's energy efficient or not energy efficient. My office has free electricity. Well, it's not really free. I'm paying the rent on my apartment. So it's kind of included in that. So it's not actually free. I do have to pay for the storage. Let's talk about companies and ETFs and mining companies and DeFi that hold Bitcoin. There's a whole slew of them. Link down to the website so you can go check out all the different companies that hold Bitcoin, how much they hold, how many ETFs hold Bitcoin. Because ETFs right now have 1.3 million Bitcoin out of the 21 million Bitcoin that's available. So they have just over 6% of the total circulating supply in their control. And that's kind of important just to throw it out. Somebody made a comment today, actually, that Bitcoin price would have went up without the ETFs. Cricket? Well, that was a cricket noise. Maybe, maybe not. It really comes down to the M2 money supply, but the ETFs have really helped out in the overall scheme of Bitcoin. And why do I say that? So ETFs over the last year, 2024, brought in $1 trillion. iShares and IBIT was the third highest ETF with $37 billion, only to be behind VU and IVV. It's the third highest inflows into ETFs. You can't ignore something like that. Oh, maybe you can. Maybe you live under a rock and don't know what I'm talking about. So for IBIT, it has $56 billion under assets. So when you look at this, IBIT is the 32nd largest ETF. And when you can look at this compared to gold, we are almost equal with gold in ETFs. That is something for you to understand the size and scale of those ETFs. For Fidelity, that's a different subject matter for Fidelity. Fidelity, their FBTC is Fidelity's largest ETF by assets, $21 billion. The next highest one is their bond at $17 billion. Thinking about this logically, you have BlackRock and Fidelity, two of the larger asset managers globally, having a whole lot of assets into Bitcoin. And it's something that you just can't ignore anymore. But we're here to talk about income. So let's look at some of these income ETFs over time, because it's important for you to understand some of the logic behind this. So we're going to look at YBIT, BITO, YBTC, BTCI compared against Bitcoin and Maxi. So they're not all created equal. We should know that. So YBIT and YBTC sells options right now on IBIT. They were doing BITO, but they're doing IBIT now. You have BTCI that is holding 25% in actual Bitcoin, and they sell options on an index that is tax efficient. So we like tax efficiencies. BITO and Maxi, oh, those are two different animals. They're using future contracts. Maxi actually takes advantage of an income overlay on top of future contracts. So they're even doing more income, which we'll see. So it really comes down to what you want and what your expectations are. But I am going to, at the end of the video, point out why future contracts might not be the way that you want to play income in retirement, unless you're just going to try to play the market. And we'll go over those slides at the end. When we look at the first 6-month chart, and this is price return, you can tell who is the winner and you can tell who is the loser. I sit here and I would not own, personal opinion, YBIT or YBTC. Just my personal opinion, just because everybody else is at least 11% to 18% to 26% on price return. You just have to sit back and go, why are the other ones so low? And it's an opportunity for you to think about that. If I look at total returns, hey, now YBIT is up, BTO is up, and everybody's in the positive. But that's what you would expect, to be in the positive. One thing I should point out, BTCI has not been around for the whole entire time. But when you start looking at when they were around, you can see that everybody was close to that break even point on the chart. So we just sit back and say, this is not, so we can say that this is kind of comparable because everybody started at that break even on total returns. If I go out 1 year, you can see where YBIT is, BTO, you can see where YBIT is, you can see where BITO is, and the rest of the funds. 1 year price return Maxi has really done something different compared to everybody else. Saying it as it is clearly Maxi has done something for price return. When we look at 1 year total return, ooh, doggy, Maxi's keeping up, BITO is keeping up. Some of the younger funds are not keeping up, but they're not as old. And you have total return for YBIT not doing so good, and YBTC is actually doing okay as a total return on a 1 year chart. But we're going to scan in just a little bit. We really need to scan in, and this is just for me because I am a fan of BTCI because they actually hold something of the underlying and not just do synthetics or future contracts. So when I look at this, I see BTCI slightly behind Maxi, slightly behind BITO, but price return, they clearly beat YBTC and YBIT. On a total return chart, we can see YBTC is in last place, BITO, Maxi are leading the way, and BTCI is sitting in third. I will play with the third place player for holding something of the underlying, and we're going to talk about future contracts and why you may need to go search those a little bit harder in the future. But what we're going to talk about now is why Brad has said in other videos he is going to stop DCAing in at 110,000. It gets to 110. I'm going to take my 8% and I'm going to take the rest of it and sit it aside. JAAA or some safer fund for longer term thought process. But right now, why do I say 110K? If I bring up a chart and I point out, stop adding at 110K, the normal floor in a cycle is the day that the new president gets elected. I don't know if you knew that or not. That is something that is not readily available on the internet. You have to know something about Bitcoin. And this goes back to when Biden got elected, Trump got elected, and Mr. Obama. You can go back and see when they got elected, and you can track that that was the new floor for Bitcoin. Now, you can also see where the support levels are. You have multiple support levels, but the biggest thing that I'll point out is at 110, the new I don't get my 8% is below the floor. It is below the two other support levels. And I want to say that those support levels are critical in the next crypto winter. I think we may get back down to the floor the next crypto winter to figure out where you want to stop DCAing in. I'm going to stop DCAing in at 110. Take my 8% and put the rest aside. So where are we cycle-wise? I am going to say that we are in a consolidation zone. So what you see in the past is when the green lines, and those are the moving averages, kind of consolidate together. They get together and then they explode up. That is what happens. We do not know exactly what's going to happen with Bitcoin and the new administration, but we can probably say that something is going to happen in the next 4 years, and it'll probably happen in the next 100 days. So I'll continue to DCA in until it gets above that 110K. So that way I always pretty much know that I can hold it forever. I am not somebody that puts something into their long-term account and says, I'm going to get in, I'm going to get out, I'm going to do this, I'm going to do that. I want something that I know that I can take my 8% and be happily ever after. That is why I look at it that manner. Now, I only want to point out what I'm doing. If I was younger, I would have bought into Bitcoin through one of the ETFs that did not get capped and ride it up until later on, whatever that peak is going to be. Tom Lee calls for 250 or something like that, but who knows? I am not younger. I'm in retirement. Just pointing it out that I'm playing this for income, not for trying to grow my account. I will grow my account, and this is something that I keep on trying to harp to people. I will grow my account because when I take my cost, so when I take my 8%, that's what I live on, and I use the other, and that's approximately 18 to 17%, and I invest it in someplace else, I'm actually increasing my cost in something. Would it be JAAA or Clause or one of these other ETFs? My cost is increasing. And remember, I take 8% off of cost. So maybe I'm not using BTCI to collect my income, but I will be using BTCI to increase my cost so I get a pay raise over time. And that's what it comes down to. That is what I am doing. And it might not be what you want to do, but that's all up to you. The last thing I'm going to talk about is Bitcoin futures. I kind of want to make sure you understand what you're getting into with a maxi or a BITO. So let's bring up a chart of BITO from when the day that it started. Ouch. Ouch. What do you mean it's down 42% from the day that it started on price? That's right, ladies and gentlemen. These are future contracts, and we get this thing called contango and backwardation. And that is what you have to be worried about. Contango and backwardation. Right now, price is going up, so it's in contango, and you're good to go. But when it turns the opposite direction, it doesn't look so good for everybody else. But personally, my personal experience is I bought BITO when it first came out, and I sold options on it. I did all my own options trading the whole entire time during the down market, and I rode it. Yes, I rode it all the way down to minus 60%. But I was selling options and increasing my portfolio. And that's why I get into this whole conversation about increasing the portfolio and the amount of shares that you have. Because as soon as the market changed directions, and I rode it going up the opposite direction, collecting all the income, reinvesting everything, and put it on a total returns chart, I was able to retire early. And that is how I was able to retire. I was able to retire because I recovered from those 60% drops in my portfolio. And we won't tell you how many hundreds of thousands of dollars was sitting in there. Let's just say I rode the cycle and did very well riding out the cycle. So I understand the cycle probably better than others because my retirement a couple of years ago was I was going to work for the rest of my life because I rode out BITO during crypto winter. But it was actually one of the better moves I've ever done. Now, does it play out that way in the future? Don't know. I did buy the new ETF from Max on all their crypto, and they have IBIT and they have miners. I have a full knowledge, more knowledge than I want to talk about on what's going to happen with those funds in crypto winter. But in between time, let's collect a little money in them. We also know that they will go down next crypto winter. But is this a new super cycle? That is something that comes out every now and then, and it comes out Basically, this is the concept of what happened to gold when gold had their ETFs. I don't think everybody realizes that the gold price went up for the next 15 years when they came out with ETFs. So when somebody says, oh, the Bitcoin ETFs don't matter, maybe they need to look at the history of gold and what happened with gold when they came out with ETFs and not just live in their own little bubble. So the last slide is future contracts right now are in contango. That looks good for those in Maxi and BITO. But as soon as they're not in contango, and that's where you're getting your percentage and your income is going to decrease dramatically. Yes, it will decrease dramatically when it's in backwardation, and it will go into backwardation for a long time. Your price will go down harder in backwardation than actually holding the asset. That was seen on the BITO chart. So just be aware of where you are in the cycle, and you may want to get out of the cycle, but that is playing in and out, and that's not what my plan is. My plan is to hold, and I will ride the next cycle down. I'm a long-term holder and believe in Bitcoin. You can say, it's foolish, you should sell out at the top. Do I need to? I have the income. The chart says, hey, I'll have my 8%. What do I care? I'm in retirement. I am not trying to increase that side of my portfolio. I have a growth side of my portfolio that I play differently than I play my income side of my portfolio. Just pointing out the difference between income and growth. Now you can have both, but at the same time, you may be trying to play too much of the market, and a lot of us don't want to be sitting there hoping at night, do I sell or buy? Because that is not my long-term plan. I plan on holding. I try to eliminate funds that I lose confidence in over time, or move funds to other funds that I think that are a longer-term hold in the direction that I would like to personally go. So until next time, God bless.